Hey Goku, so you know the boys were fighting and there was a little girl crossing the street and they're just scrapping in the street. I saved the little girl and a mom came out of nowhere and was just like, thank you for saving my daughter, you're a hero. I said heroes come in all shapes and sizes. You know I'm a little extra, so I took it a step further. I told her that heroes come in all shapes and sizes. That's why they put their pants on one leg at a time and sometimes even do a little jump to get in those pants. She took it as a fat joke. I don't think she appreciated fat jokes because it didn't end well after that. But how was your day? You took a sandal to the face? But that won't do anything to you. Emotional damage. Want to get some ice cream? You should probably get some jeans. Hey guys, welcome back to the After Hours. I'm the A-Tail Beast, and today we're going to talk about liquidation scams in the market. Now, one of the things you have to know is that liquidation means one thing. It means money. It means the flow is leaving. Now, when we talk about liquidation scams, you have to understand the key word in here is not liquidation. It's actually scam. When we look at scams, especially during the winter, you understand that there has to be an opportunity and then you have to be robbed of that opportunity for it to be considered a scam. Now, if we take a step back and look at the word liquidation, what does liquidation mean? When we look at liquidation inside of the stock market, we understand that this has something to do with the flow of money. Now we'll use this week as an example. If we look at VSME, this is an advertisement company from Hong Kong. When there's Hong Kong, we understand that they have a lot of money. They have a lot of investment banks. And VSME is just one of the advertisement companies over there. We don't know who's backing them, but we do know that there's probably a lot of money involved. Now, when it comes to money, as a rule of thumb, it's always a great idea to spend someone else's money before you spend yours. And the best people when it comes to that kind of logic is people from China. Now, when you think about it this way, look at China. All the time, they like to have investors that are in America, adding another income source that's away from your home country. Makes you a foreign company. If you're listed in the US and you only took a fraction of your company, like 5%, up to 25%, and then you put it on foreign soil, there's usually a conversion rate when it comes to that type of stuff. It's usually 1 to 2, 1 to 25. It always varies. Sometimes there's a conversion rate between the shares, and that's called ADS. In some of my previous videos, you've probably seen me talk about ADS when it comes to the foreign companies. And the reason this is important is because this makes another layer of ambiguity. And we understand that ambiguity in the stock market creates fear. Longs are prone to panic. And when they do, short sellers come in. But when we look at the core of all these scams, it usually has the same products: positive news, a catalyst, or just massive amounts of volume. Now, when we look at these stocks, we understand there's gonna be a spike. In rare times, there's gonna be a parabolic. In all cases, things go up, but they don't go up all the time because as a rule of thumb, stocks don't go straight up and they don't go straight down. But in the times that they do, it's a liquidation. You've probably heard about the bank stocks when there was a bank run and a banking crisis. During that banking crisis, a lot of stuff happened. If you want to know more about that, check out one of my previous videos. Now, what's important about those bank stocks was that there was massive liquidation. There was so much money that exited the bank that it created instability in the bank's core itself. They didn't have enough money to fund the amount of withdrawals that happened, and that caused a bank run. And once that bank went bankrupt, they had to be bought by someone else. But before that point, they needed to liquidate. So you've seen stocks with a stock price of $100 or at least $20 go all the way to $1. Now, this doesn't happen all in one day. It usually takes about a week or two. And there's usually a Chapter 9 or Chapter 13 or some form of bankruptcy letter that goes out to everyone. But that's only the case for strong fundamental companies like a bank. When it comes to low float stocks, especially low float foreign stocks, you need to understand at any moment, this stock can literally go to zero. Another form of liquidation. You probably heard of what happened inside of cryptocurrencies. A lot of the time, there will be a massive amount of liquidation there. Now, another form of liquidation is dilution. If you looked at the cryptocurrencies, you probably saw that there was Luna coin, Dogecoin, Goku coin. You get the picture. For Luna coin, it was traded in the double digits. For now, we'll just say that was $99. The next day, it was trading at $1. The way they did this is they caused a massive panic. So without volume, as well as volatility, there is no market. On the other side, when it happens in the stocks, you probably see this inside of foreign stocks when they want to cash out. Now, you've probably seen stuff like that on meme stocks. Now, when it comes to these meme stocks and any stock in general, you have to understand that they don't naturally go straight up and naturally go straight down. If they do either of those price actions, you have to understand it's most likely a scam. Let's talk about what happened this week. Let's start off with VSME. And what they did was they expanded into a new city. After that, they did a public offering. As this is happening, the stock went over 125%, and that took 2 days. But what's more impressive is that in 2 hours, it lost over 100% of those 2 days worth of gains. Now, more examples of this week, you have VINO or CDT, maybe even FRLN. We're talking about the real estate market, communication sector, and healthcare. Now, when we look at fall and winter, we usually see this kind of volatility in healthcare stocks because in general, the nature of a healthcare stock is to fund their research. And to take the money out of the stock market, you have to have a dilution. And to do that, you have a public offering or some other form of dilution so they can use that money to fund their research. Now, outside of the healthcare sector, they usually try to make it less obvious. When it comes to volume distribution, the best thing you can do is look at the recent history because a lot of the time, the price actions are fake. The numbers are fake. So when we trade, we understand that at any point, there could be a massive mistake that can wipe out the majority of your gains. That's why you need to manage your risk on these low float stocks. This goes double for the foreign stocks. That's why the majority of people buy instead of short sell. Because if they did get short squeezed, they will owe more money than they have. Now this week, we saw VSME, CDT, FRLN, and VINO. With these stocks, each one of them had the same price action. They went up anywhere from 125%, or they even went up 500, even 700%. But what makes this sad is a lot of people chased, thinking this is maybe going to 100. Instead, by the next morning, they ended up even below the previous close. And that's what you call a liquidation trap. But that's all I got for you today, guys. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.